Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you a brief update on the outlook as we're looking at our corn and soybean markets as we get ready to head into planting season. Now, as we're looking at this update, this is as of mid-March, so we've just closed out the crop insurance sign-up period. So we've signed up for a crop insurance, and now we're basically the market's really getting prepared for when planting will begin. And so we're going to be start shifting our focus from what's been happening in South America and sort of what's been happening to demand. And we're going to become much more, let's call it supply focused, especially over the next couple of months, as the market will start to react to those planting conditions that we see out there. And then the planting progress reports we'll get throughout the planting season. But in order to set that up, let me start off with where USDA is at right now. And as we're looking at the 2022 marketing year, that's that fourth column when you look at this table, we're in the middle of that marketing year right now. As USDA looked this month at what was happening within the corn market, what they found was continued weakness, especially as we look at international demand. They ended up lowering the export demand by another 75 million bushels. So as you look here at the table, that is now down to 1.85 billion bushels. That's over 600 million bushels less than we exported out of last year's crop. So we are seeing a sizable cut in terms of the export quantities we are shipping out of the corn market. Now, that shrinkage in export demand is matching up sort of with the smaller crop that we produced this past fall, but it is also, let's call it, putting some downward pressure on the market as we look out there. And we have seen the corn market pull back here, especially over the past 2 to 3 weeks, as we not only absorb this export, demand situation, it's also shrinking because we're seeing much more concern, I would say, about the general economy, not only here in the US, but worldwide. That has been flavored by what we've seen, especially within the banking industry over the past 2 weeks. Now, while many of the banking problems are mainly in the tech sector, as we're looking out at where the problems lie, the problem is that uneasiness does spread throughout the entire general economy. And so that does have some implications as we're thinking about crop pricing over the next few weeks, especially because as we watch those investors seek, if you will, safe havens for their funds, the idea is ag may feel the if you will, the give and take as those investors look for those safe havens and then finally end up parking those funds. Now, thinking forward as we look into 2023, again, the expectation is that by the end of the month, USDA will announce larger corn area than we had last year. So we're looking at a bigger crop, and that's why that export demand does loom large in the picture as we look out there because we'll need that demand to bounce back in order to help us work through larger supplies if we do get that higher acreage planted. Now, when it comes to the soybean market, we saw USDA do some different moves here. The idea is that they did take soybean crush demand down by about 10 million bushels here. So we are seeing a little bit of a slowdown in terms of domestic usage of soybeans, but they also increased export demand by 25 million bushels. So net, we actually did see soybean usage bumped up here this past month. And so when we're looking at the export tail here, while corn is down significantly year on year, soybeans have held up much better. While we are seeing the year over year numbers are now in negative territory, the idea is they're not sliding nearly as much as what we're seeing in the feed grain side. But as we look forward into 2023, again, the thought process is here is that USDA is saying acreage may hold about the same. I'm actually looking for it to be a little bit higher. But anyway, it's looking at the potential for, again, a bigger crop this coming year and the need for, especially international demand, to bounce back here to help us work through these crop supplies. Now, in looking at the run up here into planting, we are seeing that there are still dry conditions, drought conditions across the Great Plains, but we have been watching these conditions improve across the vast majority of the West as we have seen more moisture moving in through the Western US. And a lot of that has to do with the breakdown of La Nina, the movement into more of a neutral position when it comes to the El Nino La Nina cycle, with the projections here from from the National Weather Service saying that we will likely see conditions move towards an El Nino situation as we look towards harvest time. And so this bodes well for increased moisture across the Corn Belt during the 2023 growing season. So again, reason to believe that we could see some larger crops here in 2023. Now, as we look at the world situation and finishing out the 2022 crop year, we have continued to see USDA and private analysts adjust, especially the Argentine corn and soybean crops downward due to the drought problems that have been happening down there. And so, as we can see here, just within the last month, they've taken down Argentina about 7 million tons. That would translate to about 275 million bushels. So that's a sizable cut in that Argentine production. But we continue to see growth as we look at the Brazilian crop. As you can see, year over year, they're up over 9 million tons. And so we do see more competition as we're looking out there on the corn side and the soybean side. Again, keep seeing the Argentine crop being brought down here, down another 8 million tons, which would translate to about 250 million bushels. But you look at the tremendous growth we're seeing out of Brazil. And so world supplies are a little tighter on the corn side, and they're more ample, if you will, on the soybean side. But what it adds up to is that we are seeing significant competition as we look at our export markets. And so as we look at the soybean market, it basically was holding at or above last year's levels, still within the last 4 weeks. And then we've seen a little bit of a slide in terms of those export sales. And this is typically at a time when we do see the markets transition from purchasing here in the US to purchasing from South American markets. And so that transition seems to be biting a little hard right now. And we are seeing these numbers decline year over year, with USDA's expectation putting us on that black line. So as they're looking forward for the rest of the marketing year, it looks like the red line should try to trace along right about at the level that we see for our 5-year average. On the other hand, our corn market has been significantly down in terms of international sales throughout the entire marketing year. And while we are seeing, let's call it the pace of sales approaching normal levels, that's not gaining us any ground when it comes to in terms of the overall export sales. And that has been the real challenge for the corn market, as we are lagging roughly right now about 500 million bushels below normal pace at this time of the year. So we've seen this export, if you will, decline, working away, chiseling away at our prices over the past few weeks, along with, like I say, investor concerns as we see basically hedge funds and index funds rebalancing, given what's happening on the financial side. And that has led to some lower prices here as we've moved into mid-March. That said, though, we are still looking at fairly good prices across the board. As we look here at corn futures on St. Patrick's Day, the idea is that we were seeing old crop corn futures holding at or above $6. It's not until we approach harvest time here in 2023 that we see those futures drop below $6. And then they're maintaining strongly above 550 as we look all the way out into 2024. So these are reduced compared to where we had been most of the winter, but still at profitable levels. It's just that the profit margin has taken a hit over the past couple of weeks. And that same can be said for the soybean market as well. As we look again, old crop soybean futures holding above $14 a bushel, sliding into the 13s as we look at new crop sales out there, with the futures market actually being, if you will, a little more pessimistic as we're looking out there towards new crop soybean futures, as the season average price we would estimate for new crop is floating in at around $12.80 a bushel. That is below where USDA is currently projecting at $12.90, but not significantly below. And so the storyline here as we're looking right now is that, yes, profit margins are tightening as we look at the expected returns to the 2023 crop, yet we're still seeing price levels that are covering production cost and maintaining at least profit margins, while they're smaller, they're still out there. And so it's a good place to be going into planting season as we look out there. Now, I think in looking forward, what we can expect is that as we're seeing, sort of the market roll into uh, the latter part of the month, we will likely see continued downward pressure, especially if we do get higher acreage for both corn and soybeans in 2023, with likely a bounce back up in prices as we move through April, especially if there are some planting problems out there across the U.S. Corn Belt as we sort of saw last year. If you think back to what we experienced in 2022, we saw basically a limit down day on report day on March 31st as USDA released that acreage number. And then the first 3 weeks in April, we built those prices back up significantly and, in fact, continued to build those prices up into mid to late May. And so I'm expecting a similar sort of pattern as we look out there, especially if we do see some delays in planting as we see more moisture moving in. If that moisture is coming in, especially as we move through April, that does tend to slow planting progress down and provide an opportunity for the markets to bounce back up again. With that, I'll stop. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. Thank you for your time tonight.